So welcome everyone. Appreciate you giving us an hour of your lunchtime to hear some wonderful insights and information. We have two fabulous speakers today. We have Nicole Anderson, who's the managing partner at Redsand Ventures, who's going to be leading off, and she's going to be talking about fintech as a catalyst for sustainable finance in the race to net zero. And then following Nicole, we have Ren, who is the founder and CEO of Lightning Social Ventures, and she's going to be discussing with us about creating impact and building trust at speed. So two fantastic sets of insights and presentations. So Nicole, I will hand it over to you. I think you should be good to share.
Yeah, I can share. Yeah. Hey Russ, lovely to see you. I only ever see you on pages of newspapers and in name and lights. It's so strange to see you.
I'm here and I'm excited to hear from you guys. I'm here for the next 30 minutes, so I don't want to take your time.
Fantastic.
Go for it, Nicole. Lovely to see you. Lovely to see Ren. Thanks for joining us.
Pleasure. Okay, right. So let's get the technical bits on the road.
Actually, right. Sorry, Nicole, just very quickly, and I will say, everyone, feel free to either post in the chat your questions or jump off mute and as Russ just did, just jump in and have ask your questions. Nicole, sorry, fire away.
Of course. So this is a PDF. I hope it's taking enough of the justified screen space. I can never tell with PDF, but hopefully there's enough. Can you see that okay?
Yeah, it looks fine.
It looks fine. Okay, excellent. All right. So yeah, I mean, I'm coming at this story today assuming a fairly, I guess, level playing field in terms of the understanding of sustainable finance. And don't feel alone. I mean, this is an incredibly I wouldn't say new, but evolving theme. It is probably the biggest theme in finance. And of course, much of the interpretation of what the future of finance becomes is heavily predicated on technology-based tools and mechanisms in order to create the visibility that sustainability and transparency require. So what I'm going to do is a little bit of I guess a little bit of an education without teaching anyone hopefully to suck eggs in terms of where the industry is. I also thought it would be useful to bring this right down to earth in terms of two very practical lenses on sustainability and specifically ESG and what that is meaning in the context of the pandemic, what that means in terms of the kind of economic consequences we are all facing globally, but specifically some UK examples. And then how is technology, specifically fintech-based business models coming to the rescue, and what is the future? So, so hopefully that is a good enough circulation through the topic. So as Simon mentioned, I run a business called Redsand Ventures. We've been around for close to 9 years, and we are an interesting business model. We've evolved over the years from always very much a strong bias to financial technology and innovation, but we, have gravitated more and more towards capital allocation to mostly our internal innovations, but now as we go into 2021, investing in third-party innovations. So we're a hybrid business model. We're actually looking at acquiring a couple of software companies. So we'll have a ESG software line. We will have what I call a deep tech incubator. So, technology assets to help us create our own ventures and assist corporates predominantly in accelerating their own pilots and ventures to market. And then essentially a capital pool where we'll be investing alongside other investors into what we see as sustainability. Now, the interesting thing is, of course, sustainability is a very loose term. Let's put it that way. It's very elastic. It's being used in all kinds of ways, and you'll see. I mean, it's something we have interpreted in a particular way because there is essentially an open playing field right now, but we've interpreted in terms of verticals that we see as incredibly important transitional industries. If these industries do not transition at the pace required, then we all pretty much are going to suffer not such a great future path. So I'll touch on that. But you know, many of you may have heard the term ESG, many of you may have heard the term green finance, but sustainable finance is really probably, I think, a more helpful description in that it is really looking at the integration of ESG. For those of you who don't know what ESG is, it stands for environmental social governance. And that in and of itself is being applied, you know, very loosely at this moment in time because it's a moving ship. But sustainable finance is really the adoption of ESG principles into business decisions. And it is also talking to the myriad of challenges that are facing the financial industry in order for themselves to become relevant to their market, to become far more responsible to these stakeholders, and also looking forwardly as how they act as a catalyst to the safe transition of existing business while encouraging the entry of new market makers. So it's a really, really interesting quagmire facing finance at the moment, and it is undoubtedly probably the biggest topic in, you know, in public markets. The other thing I'd say is what's very interesting now, given the fact that, you know, almost all of my entrepreneurial career has been based on the fintech side. It's the first time ever that I've seen the bastions of I guess, lack of change. So, you know, the retail market, the retail banking, insurance, and lending has always been very active in terms of fintech. But investment management and capital markets, almost nothing, and certainly underwriting and insurance to some degree, but not really pervasively. But now sustainability and the sustainability agenda is really calling on those two corners, those two segments of the market to really step up. I mean, this is where the pressure point is coming from. So very, very interesting change now, and a very different driver for innovation. So I just wanted to make that point. So I talked about this interpretation of ESG and sustainability. I mean, we ourselves have taken a particular lens because of our discipline and our experience as a team. So I've got the finance background, but my team around me have a vast experience in food production and agriculture, healthcare, education, sustainable living and real estate, particularly. So, you know, the reinvention of how we live and work in the same place is a big theme. And then a particular example, which I'm going to bring to life, is the ocean economy. And that is, you know, many things: hospitality, shipping, and fishing. But you know, we'll see, you know, the numbers, but an incredibly important macroeconomy for almost every territory in the world. So I'm sure many of you have seen this wave depiction, but you know, yes, whilst the short-term pain, and it's been extreme in terms of the last year, has meant that you know, all global resources and ourselves and our mental capacity, I guess, have been fixated on how we transition through this pandemic. It's been incredibly real. But at the backdrop of that, you know, even since post-2008, the world has really not suffered a rebound from the credit crisis. And the liquidity challenges that actually spawn the first wave of fintech still remain to a large part as a systemic challenge, right? So there is, you know, no secret, whether it be macroeconomies and countries, right through to the individual, you know, the credit market is the dominant market. And that is, you know, a real concern. And this pandemic is only exacerbated that challenge. But in the backdrop is climate change, and climate change remains, for obvious reasons, has been for obvious reasons something that everyone has kind of grappled with, but it hasn't been tangible enough. And I think over the last 24 months, we've seen a collective effort to globally for people to really begin to get to grips within the finance industry at almost every level of what this means for them. Some of it being forced, but certainly the expectation amongst peers, and certainly the individual market pressure is all coming together as a pincer move for change. So all of you, I'm sure, are very familiar with Mark, who's now no longer a governor of the Bank of England, but he was a real stalwart in really pushing forward the climate change agenda, but not so much in as just this complete stick all the time, but the huge potential opportunity stroke carrot for the industry. This does represent a reinvention opportunity, that new products need to come to the market. The market, whether it be the credit market or the retail market, is demanding a change in terms of the way in which financial products are released and serve communities and corporates alike. So it is a huge opportunity. And, this quote from Oliver Wyman, I think, is quite a powerful one. At any point in time, you're looking at a $50 to $150 billion market, and that's annual. Just by way of interest, the ESG market, however it's measured, but, out of the World Economic Forum, is sitting at circa about $40 trillion. It's a massive, massive opportunity. But if we look at the reality on the ground, right? So one of the biggest challenges, this counteraction between a sustainable lens on short, mid, and long term versus what this pandemic has thrown up is really a big tension. Some would argue it's actually been a catalyst. Others would argue the pandemic might and may continue to extend attention away from a greener build back, right? So that is something that I think is up for debate. But I think the reality is this is all about technology solutions for good and how fintech can come to the aid. And it is already doing that. But I think the real cause for concern, or some of the kind of numbers we certainly are seeing in the UK, are very serious. This particular study was taken in the summer, so these numbers are probably even more acute right now. But 20% of the UK population is concerned about, job security, and actually 35% of those are individuals who have full-time employment. So very interesting. The next slide is actually a completely different lens on what, how much of our economy relies on the gig economy, right? Or people living on a minimum wage. So that's one thing to look at. The other thing is, financial, I guess, concerns are one of the biggest underpinning challenges for mental health. And almost 20% of the UK population, however they measure this, have had suicidal thoughts during this pandemic. I heard some horrific statistic actually out of India, in fact, that I think there have been 10,000 suicides within the farming and agricultural community of India because of the threat of of privatization in agriculture in India. So the lack of government protection is potentially going to be something Indian agriculture will face, and this is causing huge concern and hardship and worry. So this is really, very much, this is about life and death, really. So incredibly important. And I think, the piece I put forward regarding the fact that we actually never really recovered globally from the financial crisis. We've just had a kind of doubling down on challenge, has meant that debt and living on credit is a very, is just an expected part of way of life, and a necessary part of way of life. But this is obviously going to become, and is already becoming, incredibly difficult thing to manage systemically. Now, if you look at where we are as a UK economy, I don't expect you to drill down too deeply into this. I'll just kind of talk about the patterns. But these two bar graphs are actually highly correlated. What they are demonstrating is they're demonstrating how proportionate our economy is based on people who live, either on an hourly wage, a daily wage, this gig economy concept, or a minimum wage. So you can see just by virtue of this graph, how much of our, whether it be employment rate or portion of the population in numbers, relies on this kind of income. So highly unstable source of income. And what that amounts to, all right, is a significant number, circa 7.6 million jobs, are based on an hourly pay band. So there's extreme, extreme exposure to changes in economic conditions. So I'd love to see this data as it's revisited, probably come out in March again, but this is the latest I have. So what does this mean in terms of fintech and fintech innovation? Well, I think any of you who are entrepreneurs in the UK, for example, who applied for a business loan would have known, if you'd gone through any of the major four banks, sorry to say, that would have been an incredibly painful exercise. For major high street banks had enormous trouble in releasing these loans. And this was one of the key moments for the UK fintech community to come together, to step up, to ensure that liquidity was reaching businesses in time. But what this particular, and it's very busy, but I think that the kind of salient point in this slide is that there is a huge, very important correlation between financial inclusion and digitization with the growth of an economy. All right. And that particular graph down below is an extract out of the IMF, which demonstrates that strong correlation. However, with digitization, and you'd think that the UK economy would be way ahead of the game in terms of its services, in terms of the digitization of finance, and it is. But when you take the kind of economic reality of living on, in the kind of real economy, and people living hand to mouth, so to speak, you have this disparate gulf between people who really are lacking consumer protection, they're lacking education in financial products. And really this is, again, such an important component to why fintech was so successful in the beginning, was that whole financial literacy piece. So how have we, what are some kind of real use cases in terms of sustainability, which has a big social component, and the fintech community? Again, this is just a lens on how things fared over the last year with some of the UK fintech community. Well, it's super interesting. For the most part, the COVID impact has been incredibly positive. So, we've seen huge growth in online payments and banking infrastructure to a large degree, because a slight latency on financial data and analytics, simply because the transaction engines needed to move faster. But what we'll see now, I believe, just because of, the fallout 9 or 8 months later, the kind of real exposure will mean that financial crime will be on the rise, credit exposure, and the way in which credit is reevaluated to help prop up and reinvigorate certainly retail banking, will mean that the data analytics space is likely to increase. And then lending has been a bit of a mixed bag, and I think that's predominantly because of the fallout of SMEs. I think the last count, according to my data, was there was anything between 500,000 and 700,000 SME businesses in the UK that could go into liquidation by April. So really concerning picture. But some of the names at the bottom just indicate how the fintech community came to the fore. So PayPal, I mean, I wouldn't say that that's a complete association with UK fintech, of course, but nevertheless, they took an immediate stance to waive any fees on chargebacks specifically to businesses. Iwaka, an online lender, very well known. I'm sure many of you are familiar with them. They announced the open lending as a open lending strategy, which was really enabling both incumbent banks and fintechs to use their platform to allocate loans faster, within days, not weeks. Then you had interesting things like funding options. Got to work very, very quickly. They are like a kind of money supermarket of lending for businesses and for consumers, actually. And they onboarded another 20 lenders within a month. And Crowdcube, if you hadn't seen it, ran a campaign to actually save our startup. So that was really, very encouraging. So the agility of fintechs, it has been proven, and I think this is, again, not only kudos to the fintech community for doing what they are doing and continue to do what they're doing from a social and community perspective, but as you'll see, the next part of my presentation is all much more about the kind of environmental potential that fintech will play. So, so that my own segue. So, what do we? I've talked very much to the social component within ESG, and try to bring that to life in terms of what are the exposure points, what does this mean for innovation, who are the innovators that are actually performing. Just hold on a second, my battery's about to go. So who are the innovators that and entrepreneurial ventures that actually came to the fore, and it gives you a very practical lens on how that's translating into activity on the ground. But if we look at the other component of ESG and the environmental lens, there I guess the canvas is slightly more mixed. Yes, we are certainly seeing a lot of activity and interest in how the consumer psyche is changing towards a much more sustainable products, wanting to have greater transparency on how their money is being accrued or used, whether it be an investment product or a trading platform, where greater demand in terms of making sure that they really understand that their providers and their advisors are actually do have greater insight in terms of essentially the money trail. But the bigger play for sure is how these big walls of capital, whether they be insurance or investment management or fund management, actually get their act together in order to service the transition necessary. And ESG is really a data challenge. That's what it really is, because up until now, ESG has been something that has been very much left to self-interpretation, predominantly by large companies or listed companies. So BP, self-reports every quarter as they would as a listing company based on their interpretation of sustainability. And then the myriad of data providers, whether it be Moody's or Bloomberg or Refinitiv, they, as peers, but also as competitors, have jostled against one another in actually defining their own methodology for scoring companies. So it's incredibly frustrating and confusing picture. But one thing is for sure, the transition, the harmonization of how businesses of whatever size are governed, all right, and report can only be possible with technology that actually is real time and what we say is asset level, which means actually the physical asset, the physical business, that oracle, that lens on operations can be made much more visible. That independent analysis and scrutiny of a physical business is becoming, you know, the kind of go-to or the nirvana. So there is a definite move to actually looking at, as you'd expect, the kind of big tech challenges, that the big tech solutions that can solve these environmental challenges. So let's move on very quickly. So yeah, so what are we seeing? It's all about the data, as I said. So, you know, the term big data has obviously been around since the year dot, but I think what this is doing is it's seeing itself being formed and shaped into simulation models, a lot of simulation, a lot of stress testing for ESG what-if scenarios at the most complex level. We are now, you know, definitely faced with this interesting intersection of scientific data, climatic data, you know, merging with financial data. And these are worlds that have never had to come together to make sense before, but these constructs will determine how money is allocated, how risk is assessed going forward. So a huge opportunity there. AI, of course, core. I mean, there's not a conversation I have without AI becoming, you know, surfacing to the top. A lot, of course, again, to do with asset level data requires drone technology and sensor technology, so a big IoT play. And then our dear old friend, you know, blockchain, that still hasn't gone away. I think, you know, the use cases for blockchain to become and be this immutable record for governance is still, you know, something that many a player are still consumed with. And, you know, I've had my own fair share of using blockchain as a use case in this particular scenario for transparency. So what I thought I would do, just, you know, in light of the time we have, is just bring together one of the environmental projects I'm busy working on. This is a real project. It is focused on, as I said earlier, the area our team is particularly obsessed by, you know, ocean preservation, water preservation. And given the fact that we've actually got a base in Athens, we're building an innovation center in Athens, you know, that there's a lot of shipping that goes on in Greece. And let's just say what you would construe and think of as perhaps Scandinavian shipping and Greek shipping. Well, they're kind of very different approaches to the industry. A lot, as you'd imagine, these businesses are in the main, you know, generations old. They sit within generations, big family businesses. Many of the shipbuilding infrastructure is not that modern. Many of the vessels, the active vessels, are not that. These are old, you know, ships, so the infrastructure is aging. And unfortunately, the technology, the science-based technology up until now has proven insufficient and very costly to move the dial for change. But it is a huge market, you know, shipping is a huge market. It represents obviously the biggest transportation system we have on the planet. It is a huge emitter. It is, you know, these challenges in terms of both emission and energy reduction tend to go against each other. Of course, there's concern around the, you know, any shipping corridor in terms of biodiversity and the marine pollution and what that means in terms of consequences. I have done a lot of work and continue to do a lot of work in Mauritius. I have an incubation center in Mauritius too. And those of you may know, Mauritius had a terrible oil slick caused by a tanker going down on the east coast of the island. It is an island economy. This pandemic has meant it's had to shut its doors, so its biggest market is hospitality. Overlaid with this oil leak has meant, you know, that the economy has come to a grinding halt. It's devastating. So these have huge consequences. So how do you go about influencing such an aging, you know, old but significantly important business? Well, you know, the kind of David and Goliath approach certainly is not something I'm counting on, but thankfully we are seeing a lot of pressure coming from various corners. So the TCFD is really essentially a framework, which is a disclosure framework, which is global, but certainly within the UK will be made mandatory within the next year or two for organizations of a certain size. So that's really, really good news. That'll force it is the first foray into actually trying to define what a sustainable, responsible investment looks like. And so the regulatory frameworks, as they develop, will become a major nudge in the direction we needed to move. And this, I believe, along with the ability to actually help big capital-intensive businesses such as shipping, is really what's needed. It needs to come from both directions. So, so we're looking at, as you'd expect, we are looking at how we can provide both ship owners and fleet operators, as well as the capital allocators or the underwriters, visibility of the performance of these ships, whether they be in ports, whether they be on the ocean, you know, anything to do with the physical concerns around emissions, looking at what they report in terms of weight, you know, how much fuel they are you know, using, what does that mean in terms of the corridors that they're most active in, a huge amount of analysis we are looking at, and also looking at the efficiency. This is not, you know, this is available data, but looking at the efficiencies of certain corridors. In fact, we're also looking at a project with a charity to actually float a hospital off one of the Greek islands, one of the major Greek islands, as another sustainable venture. Not that we're, you know, we're only in the technology and space, but I guess what I'm trying to say is that the whole area of shipping and its reinvention is something that's super interesting. And as you well probably can guess, Greece has a lot of islands, a lot of aging people live on these islands, and getting to hospitals is becoming incredibly difficult. So having a floating hospital is a concept we are working on with the charity. So look, I mean, I'm going through these slides at a rate of knots. I can make these slides available, no problem. I just wanted to leave you, you know, with, I guess, a glance of how much there is, you know, in terms of fintech as an opportunity. And it's immense. I mean, this is an extract of both the work we're doing as well as some academic partners in looking at how finance can be reinvented with a greener lens. And almost in every segment of finance, there is an opportunity for fintech business models to come to the fore. So I'm incredibly buoyant. In fact, I am so excited. I'm way more excited now than I was, you know, in 2010. I was, of course, but, you know, when I first entered into the fintech space, I just think there's so much opportunity for bright minds and innovators to come to the fore and do some really amazing things that are worthy and have huge impact. So that's, I guess, just a little snapshot of some of the propositions we've been analyzing in the space. That's me.
Fantastic. Thank you very much, Nicole. Thoroughly appreciate it. That was excellent. I would ask everyone if you could just hold your questions. We'll have a good Q&A session towards the end. let me pass on to Ren now, if you get ready. But again, Nicole, thank you so much, and hold those questions. I know I've got a few to dig into a bit more detail on there. So that was fantastic. Thank you. You good, Ren?
Yeah, shall I go?
There we go. Absolutely, cool. Far away.
Yeah, thanks a lot, Nicole. That was super interesting, and it's great to see that you've touched on a lot of the topics that are already sort of close to my heart around the financially vulnerable people and the impact of COVID. So just a quick introduction on myself. I'm Ren, and I'm the founder and CEO at Lightning Social Ventures. My background and what I've spent the last 5 or 6 years really focusing on is that intersection between fintech and social impact. So I started out in management consulting, working with like Bain, and sort of got a lot of experience helping big companies get richer, but really felt there was a need to figure out how to use my skills and what I learned for the better. So post MBA, I went on to a company called Bima, which is an insurtech company that works in multiple emerging markets, and then moved to the UK about 2 years ago, first with Redsand, which is a fintech company that does payments as a service. Some of you might know of it. And then left in the middle of the pandemic to really start Lightning Social Ventures in response to that. So I'll be sharing sort of about my experiences across all 3 companies, which are quite different. Let me just pull up my slides. So maybe it's better if I don't go into presentation mode then.
Yeah, that's fine. That's perfectly readable.
Okay, brilliant. So yeah, as mentioned, I'll be sort of walking through my experience with these 3 different examples, which are all completely different in terms of context. At Bima, I joined post-Series C. We were operating in 15 different markets and actually had reached over 30 million people by the time I left. And my role there across a number of different things, but one of the things I did was to launch a new market in Malaysia, which we were able to do in 6 weeks. At Lightning 8, while I was Director of Financial Inclusion at Redsand, this was really a quick response to the COVID-19 pandemic by leveraging our platform and infrastructure and some great partners to be able to provide a payment systems to organizations that needed to disperse financial support to people in need. And during that time, we helped to distribute about £500,000. Post that, I then started Lightning Social Ventures, where we sort of dug deeper into this problem space of how can we really help financially vulnerable people and the institutions that are doing the critical work of supporting them, but don't necessarily have the digital tools or the technology to do so effectively. So what we ended up was building a new product which focused on a different part of the process when it came to distributing financial support, which was actually focused on using open banking to be able to verify someone's need and make sure that the institutions are able to get the money to the people who need it the most. So that's really new. We've sort of literally just built that over the last few months, and beta launched it 2 weeks ago, which is very exciting, but I'll share a bit about early learnings for that. I think there are actually a few common themes and learnings throughout all of them, so I'll speak to them as part of the presentation. And probably something else that's a bit unique to highlight is all 3 of these experiences have been in the B2B to C space. So I've worked very closely with the institutions that are reaching out and supporting the end users, but also heard and spoken with many of the users personally myself. Slide to start again. This is not good. Sorry, just bear with me and my funny slides. I'm going to try presentation mode one more time.
No problem, Ren.
Thank you. So yeah, just a quick overview on Bima and sort of the problem that we were looking to solve. We saw that there were 4 billion people in the world that were uninsured, and many of them in emerging markets well, a vast majority didn't have any access to insurance. But at the same time, most of them did have mobile phones. So mobile penetration was is now like 80–90% in most of the countries we operated in. So there was this opportunity to leverage mobile technology by partnering up with the telcos in order to bring insurance to a group of people that's typically very vulnerable. So most people that we support have never had access to insurance. About 50% of them don't even have a bank account. So for me, just going down to Cambodia, for example, and speaking with someone who had insurance made me see the kind of difference it could make to someone's life. There was a lady who had lost her husband in a fire, and she wasn't able to, she wouldn't have been able to put her kids through school because of that loss of income and not having anyone to support her, except for the fact that we gave her the $1,000 payment, and that made all the difference, even though it doesn't feel like a huge amount of money. With Bima, because we were an insurtech company that was entering new markets and wasn't necessarily a known brand, there were a few challenges that we struggled with. One was sort of the lack of the reputation and the social proof. So there are people that say, oh, I've never heard of it. I think it could be a scam. I've heard of insurance companies that never pay people their claims. And I don't, it's a digital company, so I don't really see that there are tons of offices around or partners that are known. So that was one of the challenges that we struggled with. But one of the big ways that we actually addressed that was by leveraging a trusted partner. So as mentioned, working with a mobile operator, which already has a known brand. And also a known insurance underwriter like Allianz or local companies that's equivalent in the country sometimes helped. The second challenge was the lack of understanding and awareness. And when you don't have understanding of a product, it really can destroy trust. So we were using a payment mechanism where we took payment like 2 or 3 cents a day, literally from the prepaid mobile credits that people would have. But not everyone understood how it worked and why and how that actually linked to the insurance cover that they got. So we spent quite a lot of time really going on the ground to talk to people on the streets. I spent 2 weeks in villages doing focus groups and interviews to sort of understand how they saw the terminology, like what they did or didn't understand about insurance, and therefore in the local language try to optimize even the small things like SMS that we would give out to them, small things like SMS, WhatsApps, the phone calls that we were making to them. And then lastly, because we were B2B and also in a highly regulated space, it was challenging to sort of go through the process of signing contracts with telcos. I mean, they can take ages with multiple stakeholders, and also to get through the regulatory hurdles, which typically varied from country to country in terms of what you actually need to be a tech provider in the insurance space. But it could be really time consuming. So we found creative ways to get started. I think the reason why we were able to launch in 6 weeks in Malaysia was in part because we found a way around that. We basically said, okay, to get to market, let's start with a free product, because that means we don't need to get regulatory approval for a new product that's sold and a new business model. And starting with a simpler product also allowed us to circumvent some of the long drawn contract negotiations with the telco that we're working with, start with MOU and then just get started. Then after that, we can use those few months to sort of build the brand and get an initial response from people, but then launch the product a few months later. So that's Bima. I'll now talk about Lightning Aid, so that's shifting focus from emerging markets in Asia back to the UK, which I'm assuming many of you are here or from. So because, as Nicole has already pointed out, the impact of COVID was huge, right? Even back in March, it was quite clear that lots of people were losing their jobs, affected by the lockdown and desperate for financial help. We wanted to do something quick and simple to be able to get money out to the people that were in need. And since Rosebank was a flat payments platform, we were able to use our existing infrastructure, but essentially set up a new branded app and prepaid card, or sorry, debit card, which would allow us to disperse funds instantly to the people in need. The way we did that, I guess, in terms of learnings, there were a few key things that allowed us to launch super quickly. So we were actually able to go from coming up with the idea to having it out in the App Store in 8 days. A large part of that was existing infrastructure that we could work with. So Rails Bank had already spent years building up the payment infrastructure, which was fantastic, and the cards and all that. We also worked with Tokyo, which was a great partner that could customize the application on the front end for us and get it out to the App Store. So having that combination of that partnership and infrastructure that existed just meant we didn't have to replicate the work in terms of setting up a whole new platform. Then we had to get to the people that actually need it. So obviously as a fintech company, we weren't sort of on the ground necessarily with all the connections and the people who needed it directly, but we partnered up with the Association of Music, Independent Music, which was looking to support a group of music workers impacted by the pandemic, and also with a number of mutual aid groups, which are like small informal groups that sprung up literally overnight during the course of the pandemic and were helping people in their local communities. So we piloted with those groups and then launched with the Association of Independent Music. And I think lastly, just sort of around getting support from people willing to help. So the reason why I could launch so quickly was like not one person's effort, right? It took lots of people who were inspired and motivated within Rails Bank, as well as our partners. Tokyo, we had support from Open Banking Excellence. We had support from many other people along the journey that were inspired and looking to contribute to this course. So that allowed us to move very quickly as a group. And then, lastly, Lightning Social Ventures, which is what I'm focusing on now. What we noticed when we did Lightning 8 is essentially the problem just doesn't sit in the payments part. That's a small part of it, but in reality, many organizations were taking 4 to 6 weeks to deliver grants to people, not just because it took ages to pay them, but the verification process was so time consuming. So there would be long drawn application forms. They would need to collect bank statements and review them to make sure that the people applying were really in need of support. And I remember talking to a lady, Anita, one of our user testers, who basically said that in previous grant applications, she's had to spend days sort of just trying to get her bank statements, go down to the bank and print them out and apply that. And that whole application process was really stressful and time consuming. And then we spoke to charities like Turn to Us, which is our first partner. And they said, you know, it's a pain to go through bank statements. It's a pain to have to go through documentation and identify if it's real. So there was the problems. There was all that paperwork that stopped them from being able to launch quickly. The lack of security meant that documents could actually be faked and they wouldn't necessarily know if someone slipped through the cracks. And the information they were getting weren't necessarily accurate and real time, because bank statements give you a picture of like the last month rather than the situation someone is in right now. So we wanted to address all these fronts, and the first, well, we'd love to tackle the whole end-to-end chain going from the application to payment as well. But because there was such a big bottleneck in the verification process, that's what we've already built and launched in beta, which is using open banking, you know, as Nicole said, a great way to get data and something that's really growing in terms of trends, to get the real-time secure information from people to get a snapshot of their financial situation, and then use that to make it more quick and effective for organizations to identify who really needs the money, and therefore be able to cut out all that paperwork and reduce fraud while accelerating the grant process. So the learnings from Lightning Social Ventures, I think there are three main ones. Again, the theme of partnership continues. We were a brand new fintech startup, but we were very fortunate that there were partners like Turn to Us, the national charity that's really well known, that was willing to be innovative, take a gamble, work with us. We were then also able to partner with other organizations like Do It, which is a leading well-being ecosystem, along with Plaid, who gave us the infrastructure for open banking, so we didn't have to build it ourselves. And we're able to get grants from Innovate UK and Nesta, and all that sort of helped us to start to build up a bit of a brand, or at least get trusted by end users when they went through the open banking process with us. We did a huge amount of work in terms of how we designed the product and the communication and language there. So if you look at the middle of the screen, it's a bit small, sorry, but there are a few sort of small things to call out. One is we've put the charity front and center because that's the brand that they know. Two, on the connect your accounts button, you probably can't see it, but there's actually a small padlock, and that small padlock really helps people to feel more secure. And thirdly, we've had included a photo of the head of grants and a quote from her on why this process is important. We then sort of built in a bunch of other elements further down the line so that people could explore and really understand why they needed to do this, because open banking isn't something that's easy for people to sort of go through and just say, hey, I'm going to give you all my banking data. We need to very quickly build up that trust. And happy to share that we've been able to get people through that process in as little as a minute. So the record is 1 minute and 5 seconds, followed by like 1 minute and 30 seconds. And a large majority, sort of currently about 80% of the people that have started, although it's early days yet, were able to complete the process. Yeah, so I think lastly, just very quickly, we were able to move very quickly, but we sort of just continued to put people at heart and to remember that we're dealing with real people and finances that matter. So we didn't want to sort of launch something that was so bad that we ended up losing someone's data, and then that had an adverse effect of people. So we had to sort of balance that out. So yeah, here's a recap of just sort of the key themes I think that have really stuck out to me, of sort of combining speed, trust, and impact. So to me, it's a bit like trust is the foundation, right, that the train needs to run on. We have to build that up very quickly before people can actually benefit from product. That then allows us to move fast, so increase the speed of the train, and then ultimately get the impact of getting people to where they need to be. In the interest of time, I don't think I'll sort of go through each of them. They're all the learnings I've talked about around sort of on the partner side, working with them to build the trust, which then allows us to reach the consumers, but building up the small things that matter and really listening to them and how we can better improve their experience along the way, while also seeking creative shortcuts on things like regulation. So ultimately, I think those are the things that have really helped me to drive impact and speed. Stop sharing. So we have 4 minutes for questions.
Yes, I was going to say, fantastic. Thank you very much, Ren. I really appreciate it. Yeah, we feel free to dive in, anyone with any questions that you have, just to get things moving. I have one probably actually for both of you. You know, Nicole, you pointed out, especially towards the beginning, you know, on a global scale and then in the UK, the technology can provide some of these solutions, but normally the people that it can get the most benefit to are also the most resistant to be able, you know, because of, you know, wealth gaps, technology gaps, trust issues, and Ren, as you pointed out, you know, you've gone to great lengths to try and overcome those particular issues. But is there, you know, should we be looking at governments or larger, you know, banks or trusted entities to help bridge those gaps and enable startups, Ren, such as yourself, or that Nicole, that you're investing in, to be able to bridge that gap and get to the people far easier?
Well, I mean, I can jump in. I mean, there's, you know, I think certainly as in parallel with the success of fintech has been financial literacy as a big theme. So, right, you know, as long as I've been involved in it, it's been a super important theme. And what most regulators, those certainly that have are open to fintechs and have sandboxes for fintech, have a very strong, generally have a very strong module, process, work stream around financial literacy. Generally speaking, it's linked to consumer protection. So I think that's in place, and you know, that's most fintechs are heavily guarded and try to do what's right by consumer protection. I think what Ren has demonstrated is actually how you can go the extra mile. That tone of voice is becoming all the more important. You know, I don't think there's anything you can do about technology education, except the user experience has to be intuitive, which is a whole different topic. But how that information is relayed, part of it is governed by regulation, but the other is how you nudge. How do you use creative nudges in the user journey and the design of the user journey so that it is consumable, that information?
Absolutely agree with what Nicole said. I think something I would add on the regulation side, specific to the charity sector, is I've noticed a lot of charities find it very difficult to get the banking and payment services they need, mainly because financial institutions classify them as high risk from a risk perspective. It's not necessarily that from a regulatory standpoint anyone is stopped from onboarding charities, but many banks and e-money institutions automatically classify all charities as high risk, and that means they have to go through extra layers of due diligence and onboarding that normal companies wouldn't have. So for the sector, that's something I really hope will change in the future in some way.
I think we've got about time. We can squeeze one more question in if somebody has one, if they want to jump in. Yeah, feel free.
Thanks. I do. A question for you, Ren. That was very interesting, both Nicole and Ren. Thank you. Ren, you originally funded because you got a grant from Innovate Finance, not Innovate Finance, from Innovate UK. What are the future funding plans? Because it's such an incredible project, but I imagine those grants were fairly one-off as a quick response to COVID.
Yeah, thanks. Yeah, it's a good question because we are like a social impact startup. So we're actually navigating through how we want to approach funding. So we've got some money from that and angel investors to start with. And we're also in the Techstars program, which has been really helpful to, you know, get started in accelerator. And
you've got into Techstars. Are you currently in the cohort?
Yes, we're
cool.
Yeah, we're currently in Techstars. So thank you. We're kind of working through that fundraising strategy, and we'll look to do a raise, probably angel focus or impact investor VCs in Q2 or Q3.
Cool. Good luck and congratulations. Great concept.
Thank you very much.
There was one question from Jan Hauser, who's left on Bitcoin, but
oh, yes.
I can quickly answer that. I think he's right, absolutely. I mean, Bitcoin mining now, you know, the latest statistics is consumes more electricity than urban cities in Argentina, if that's anything to go by. You love a statistic, I know, it's just crazy stuff. But look, I think this is a big challenge for certainly the infrastructure players that actually have delved into Bitcoin mining, specifically the likes of ASICs or ASICs, however you pronounce it. But this is all to do with the, you know, the silicon processing capability. You can't do anything about, you know, the mining mechanisms of Bitcoin. The way the blocks are mined are the way the blocks are mined, and it gets harder and harder, and therefore needs and requires more and more compute power. But there is some very interesting things going on in two ways. There is a roadmap for hardware providers to look at photonic chips, which is completely different new technology versus silicon chips, which actually use far, like huge, significantly amount less processing power, electricity processing power. And then there's the whole broader subject of green data centers, which is another whole discussion. And I've had quite a bit of experience in that. And obviously most data centers are the dirtiest thing ever because of their, the heat emitted. But the way in which you can create circular economies around heat emission is something that is a big topic. And so doing work in Scandinavia, specifically Norway, I was, working on a project that was linked to submerging data centers under new rural developments, community developments, residential developments, and actually harvesting the heat for both processing power, cooling, and heat. So, there are ways in which you can, I guess, make what is an unsatiable, it's not just Bitcoin mining, it's our own compute, insatiable requirements. They're not going away. How do we deal with this as an environmental concern?
Yeah, fantastic. You're bang on there, Nicole. It's certainly, as you say, it ladders up to a much bigger issue around the energy that's being provided and what we can do with it in those cases. Thank you both for a fantastic lunchtime. That was awesome. Loved it. And also thank you for everybody else and sharing it with us. Much appreciated. I will get my editing hat on shortly and put this together and get the video out for you to re-review it or share it as you see fit. And again, Ren, Nicole, thank you again so much for giving us your time today. And everyone have a wonderful rest of your day, and look forward to catching you next month with a bit of luck.